Okay, imagine this for a second. You're trying to send money to family, maybe? Or you need to pay a supplier, someone just across a border. But it just drags on. Days pass. Maybe there are fees you didn't expect, or the money takes some crazy roundabout route. Super frustrating.
Sure, yeah.
Well, that exact situation, that's pretty much been the standard for payments within Africa for a long, long time. Not just, sending money overseas.
That's absolutely right. For years, cross-border payments between African countries were, well, a real headache.
Right.
Often, if a business, say, in Ghana needed to pay someone in Kenya, their Ghanaian cedi, it first had to be swapped out.
Into what, like dollars or euros?
Exactly, into a so-called hard currency, US dollar, euro usually, currencies everyone trusts, stable, easy to trade.
Okay.
But the big problem, that meant the money actually left Africa first.
Wow.
It went out, got exchanged, then sent back in. That added, significant time, days, sometimes weeks, plus cost, plus risk. It was a real bottleneck.
Okay, let's dig into this then. Today, we're doing a deep dive into something called the Pan-African Payment and Settlement System, or PAPSS. You sort of think of it like, I don't know, a new financial highway system maybe? Something that's really changing how money moves across the continent. It's a pretty big deal.
It really is. And our mission, I guess, for this deep dive is to get under the hood, not just what PTSS is, but how it actually works, the mechanics.
Right.
And why it's so vital for knitting the economies of Africa closer together, and importantly, what it means for you if you're trying to send or get money quickly, securely within Africa.
So you painted that picture of the old way slow, relying on outside currencies, funds physically leaving Africa just to be converted.
Yeah.
Beyond just being annoying, what were the real, economic impacts of that?
Yeah.
For businesses trying to trade across borders?
Well, the costs were huge. Seriously. It wasn't just the delay, though that was bad enough. It was capital tied up, liquidity problems, higher foreign exchange fees just eating away at margins, and just the sheer hassle of it all.
Yeah, I can imagine.
Businesses were genuinely hesitant to trade across borders because of it. Individuals sending money home faced really high charges. PPSS aims to just, dismantle those barriers.
Wow.
By making payments happen almost instantly and crucially in local currencies.
Wow.
So that whole step of converting to dollars or euros and sending funds out, gone. The target is getting transactions done within 120 seconds.
Wow, 120 seconds across borders.
Yep, keeping the value right there, flowing within Africa.
Okay, 120 seconds. That sounds like a huge operational feat. How does PAPSS actually pull that off? What's happening behind the curtain?
It does sound complex, but actually for the user, it's designed to be really streamlined. It boils down to 3 core processes that make it work. The instant payment itself, something called pre-funding, and then net settlement.
Okay, let's take those one by one. Instant payment first.
Right. So basically it goes like this. Step 1, you, the sender, you start a payment in your own currency through your bank or maybe a payment service provider, a PSP.
Okay.
Step 2, that instruction zips over to PPSS. Step 3, PSS does super fast checks, compliance, legal stuff, sanctions lists, all validated almost instantly.
Like a security check.
Exactly, a rapid one. Step 4, the instruction gets forwarded to the bank of the person you're paying, the beneficiary.
Right.
And step 5, their bank clears the funds into their account in their local currency.
So no conversion step needed, no funds leaving the continent. That must save a lot of money and reduce risk, not just speed things up.
Absolutely. That direct local-to-local currency flow is it's transformative. But for that instant flow to be guaranteed, especially with, potentially large amounts flying around, PSS uses this concept called pre-funding.
Pre-funding. Okay, what's that?
Think of it like topping up a prepaid card, but for the banks and the PSPs involved. They need to have funds ready, deposited with PPSS in advance. So when an instant transaction comes through, the money is confirmed to be there, right there, ready to go.
So it removes any uncertainty about payment failure.
Exactly. It guarantees the funds are available for that real-time speed. Now, how they do this involves different types of participants, direct ones who connect straight in, indirect ones who work through a direct participant.
Okay.
But the key is that liquidity is assured. And throughout this whole process, by the way, all the notifications, the messages back and forth, use a global standard called ISO 2022.
You mentioned ISO 2022. Now, for people listening who aren't maybe deep in the world of financial tech, why is that standard important? What does using that specific standard actually unlock?
That is a really good question. ISO 2022 isn't just like a technical format. It's a massive upgrade in the amount and quality of information that can travel with a payment. Older systems, they carried very basic info. Who sent it, who gets it, how much. ISO 2022 allows for loads more structured data. Think invoice details, remittance information, compliance data, all embedded right in the payment message.
So what does that mean practically?
It means much easier reconciliation for businesses, less manual work matching payments to invoices, fewer errors, better tracking. It essentially modernizes Africa's financial infrastructure, making it ready for things like, more advanced fraud detection, embedded finance, because the data flowing is so much richer and standardized across borders.
Got it. So instant payments, backed by pre-funding, using this rich data standard. What was the third pillar?
Right. The third one is net settlement.
Net settlement.
Yeah. Think about settling up after a big dinner with friends, instead of everyone paying back every single little thing they owe each other individually.
Right, you just figure out who owes what overall at the end.
Precisely. You calculate the net position. Who's ultimately up, who's down. PAPSS does that, but on a continental scale.
Okay, have them.
Once a day, every day, at 11:00 UTC, PSS looks at all the transactions that have happened between all the participating central banks. It figures out the net amount owed between each pair.
And then only those net amounts are actually moved.
Exactly. Instructions are sent to the central bank systems, their real-time gross settlement, or RTGS systems, to make those final net transfers. This happens simultaneously across all participating countries, ensuring everything is settled within 24 hours.
That must drastically reduce the actual volume of money sloshing around between central banks.
Hugely. It makes the whole system far more efficient and significantly lowers liquidity risk compared to settling every single transaction individually across borders. Again, ISO 2022 messages are used here too for all the settlement instructions.
Okay, so those are the core mechanics. Instant payments, pre-funding for certainty, and efficient net settlement. But you mentioned it's more than just plumbing. What else is built into PTSS?
Yeah, absolutely. The core system itself, which they call the PAPSS Instant Payment System, or PIP, that's the engine.
PIP.
It handles both big wholesale payments and smaller retail ones, connecting banks, PSPs, you name it. And it comes with key features built in, like payments are instant, yes, but also irrevocable. Once it's sent, it's sent.
Certainty for the receiver.
Exactly. Both sides get immediate confirmation. It runs 2047, 365 days a year. Uses that ISO 2022 standard we talked about for all that rich data. And crucially, it's built on really secure foundations, strong cybersecurity, advanced fraud detection, using things like behavioral analytics and machine learning.
Okay, that sounds robust. But then you also mentioned overlay services, things built on top.
Right. These are like optional extras that participants can use to add even more value. They're not essential for basic payments, but they add powerful capabilities.
Like what? Give us some examples.
Sure. There's Request to Pay, or R2P. This is great for businesses doing cross-border billing or collecting payments, like for subscriptions. Instead of sending a payment, you can request it.
Ah, okay. Pulling funds rather than pushing.
Sort of, yeah. It helps streamline collections. And there's an escrow service.
Escrow. Like holding money safely.
Exactly. PSS can hold the funds securely until both the buyer and seller agree the deal is done. Big confidence booster for trade, reduces risk for both sides.
Makes sense.
There's also a dedicated remittance service designed specifically for individuals sending money across borders, aiming for low cost and immediate availability for the recipient, whether it's into a bank account, a mobile wallet, or even cash pickup.
That could be huge for remittances.
Potentially, yeah. And for ease of use, there's proxy addressing. Instead of needing complex bank account numbers,
You could use, like, a phone number.
exactly, or an email address, maybe a national ID number, just simpler aliases to direct payments. And finally, there's built-in sanction screening, automating checks against lists from, the UN, OFAC, and others, helps everyone stay compliant.
So it's quite a suite of tools beyond just moving money from A to B. What about the banks and the payment providers using the system day to day? What does it look like for them on the inside? What tools do they get?
Right, yeah. PPSS provides a pretty comprehensive set of tools for the participants, the banks, the PSPs, to manage everything. Think of it as their control panel.
Yeah.
For managing payments, obviously they can initiate transfers. They can also approve payments, reject them if needed. Interestingly, they can even recall certain payments, specifically mentioning those using the escrow service.
So some flexibility there.
Some, yes. And practical things, like uploading payments in bulk if they need to send many at once, makes operations smoother.
And reporting, I imagine tracking all this is crucial.
Absolutely. Reporting is key. Participants can manage their transaction rates, add specific charges if needed, but more importantly, they get access to a whole range of reports.
Like,
Audit logs, activity reports, detailed settlement reports, reconciliation reports, you name it. They can even get intraday reports to monitor things in near real time. It's all about giving them visibility and control for their own monitoring and compliance needs.
and managing users and security.
Yep, that's covered too. There are processes for setting up new participants or just individual users within a bank, approving them, resetting passwords, disabling accounts if someone leaves. Standard stuff, but essential. Security-wise, they use things like Google Authenticator, the app that generates a 6-digit code.
Yeah, the GA code.
Right. That and one-time passwords, or OTPs, sent via other channels for secure logins. All the necessary steps to set up and manage that access securely.
Okay, so it sounds like it covered the operational basis pretty thoroughly.
It seems designed to. There are even features for more detailed compliance work, like managing lists for screening, monitoring tools to check if other participants are online or inactive, viewing current exchange rates within the system, and understanding the status of transactions, like if something is postponed because it's not quite complete or stopped if it's been canceled. Plus, tools for managing funding if needed, even contingency options. It's quite comprehensive.
Wow, okay. We have covered a lot of ground here. From, the basic problem PAPSS solves, that headache of old cross-border payments in Africa, right through to the nitty-gritty of how it works.
Yeah.
Instant payments, the pre-funding, the net settlement, plus all those extra services built on top.
Mm-hmm.
It really does feel like more than just another payment system. It sounds like foundational infrastructure, doesn't it? Something designed to really change the game for trade and finance across the continent.
I think that's the right way to look at it. If you step back and connect it to the bigger picture, PAPSS is fundamentally aiming to transform how intra-African trade happens, how remittances flow.
Yeah.
It's really about empowering businesses, small and large, and individuals too, with ways to move money that are faster, much more reliable, and hopefully significantly cheaper.
And keeping that value circulating within Africa rather than leaking out for currency conversions.
Exactly. Fostering that internal economic growth. Which, it does raise a really interesting question. What kind of potential does this sort of seamless continent-wide financial rail system really unlock for African nations in the next 5-10 years?
That's a great question.
Yeah.
You start thinking about the knock-on effects, don't you? Trade between neighboring countries becoming just easier, maybe more attractive foreign investment because the financial plumbing works better, greater financial inclusion for people who were maybe cut off by high costs or slow speeds before.
Mm-hmm. All plausible.
So as you, our listener, go about your day, maybe mull that over, how could something as seemingly simple as making payments easier, faster, cheaper, how could that fundamentally reshape the economic prospects of an entire continent? What kind of new businesses, new opportunities, new connections might emerge when you dramatically reduce that financial friction?